Hi, welcome to Credit Recovery, where you learn everything about credit. I am a certified mortgage underwriter. I am a loan underwriter, and I was previously a certified credit counselor. Clicked on this video today because you just learned that everything about getting to an 800 credit score is a lie. That's kind of true. Let me explain. Let me explain. Okay, so when you're giving out information, you have to know the whole information in order to understand the information. So when you get parts of information or information like in a layer, so so everything that you already know so far is like the first layer. Then you have a second layer that is a person like me. I am a loan underwriter. My job is to approve and decline someone's loan based off their credit, their income, their assets such as cash in the bank, stocks and bonds, 401ks, any liquid cash or any liquid assets, and then the collateral like a house, a car, a boat, a motorcycle, etc. So I am like the second layer, and then you have the third layer, which is to me is the credit bureaus. But with you now on my channel, you're getting the second layer of the information, which now is going to give you that step closer to getting the full picture and understanding when it comes to building for an 800 credit score. So what you're going to go ahead and get today is we're going to go ahead and do a couple reactions to people giving credit advice of how to get to 800 or pretty much in the high 700s and how to get approved for a loan, and you're gonna learn that from moi. So be excited, because I know I'm excited because I get to give you guys more information of what you don't know. So let's go ahead and hop into this video. All right.
Hey guys, in this video, I'm going to show you how to get an 800 credit score in 30 days. We'll be going over 6 tactics that you can start implementing today, which are going to have a huge impact on raising your credit score all the way to 800. Now, why would you want an 800 credit score? Well, for everything. Whether or not you're getting a car loan, you're getting a mortgage on a house, trying to get the lowest interest rate possible, or even just getting approved for a rental, these everyday things are all impacted by your credit score. It is just a number, but it is a number that is important as So the first method that we're going to be talking about, which will really help you get to that 800 score, is becoming an authorized user on someone else's credit card. This is an effective but lesser known strategy for raising your credit score very fast. For example, I've seen jumps from 50 to 100 points immediately from doing this. So here's what it is. You're basically joining someone else's credit card. The bank will send the primary account holder a credit card with your name on it. And if that person does decide to give it to you, then you are free to use it however you want. However, the interesting thing is that the primary card holder, the person who's authorizing you to be a user on their account, is fully responsible for paying off the card. And since they are associating that account with you, it can really help you out by associating their long credit history with you. Now, to do this, you need to find someone that you trust and someone that also trusts you as well. They need to have great credit because, you are piggybacking off their credit history. But of course, if they do give you the card, you can spend on that card however you want, and that can definitely be dangerous for the other person. Optimally, it's going to be like a parent or a relative or someone that you trust who has a long credit history with that account. Now, once that primary account holder gets that credit card in the mail, they can choose whether or not they want to actually give you the card. Either way, it has the same effect on your credit score. So yeah, they can just hide that credit card, put it in a drawer, and not let you use it. But you still will reap the benefits of being associated with that account. If you are young, I really encourage you to do this, because otherwise, when you are ready to open up your own credit card, you might not have enough credit to do so. The thing is that you just have to be really careful. You need to make sure that this person is trustworthy and that they have a great credit score themselves. Because if they don't pay off this credit card, then you are screwed as well. Now, even if you are seeing an increase in your score, which you will if you become an authorized user on someone's card, you still might not get approved for certain loans. If you're trying to get, for example, a mortgage or a car loan or any loan that's rather big, they're probably going to dive deep into your credit history, into your credit report, and see that you're just an authorized user on someone's account. And that might not be enough to get fully approved for that loan just because you have a high credit score. They want to know that you are responsible for that high credit score. But you guys still definitely do this. It's a great way to instantly boost your credit score and really set up that solid foundation that you can start building off of. All right, the second thing that you guys
All right, authorized user. He pretty much said it there himself. Like, it's not going to help you to get you approved for a house and a car, which is the reason why I don't know why he started off with this as the first one, but he did. So essentially, what an authorized user is going to do is it's just going to inflate your score. So if you have like maybe a 500 or let's just say 600 credit score, maybe you'll bump it up to a 650 credit score. So that's essentially what's going to do. When we look at your application for credit and we see an authorized user, we don't really care. Like it means nothing. We know that you don't pay for those types of those credit accounts. So there's no point. So if you don't have a lot of credit and you're just like authorized user and a whole bunch of accounts, stop. Build some credit and on your own. And like you said, this is not going to help you get approved for a loan. You need more, which is why I don't understand why he didn't start off with getting a secured credit card, or maybe if you own a car free and clear, you can get a secured loan against the car and take some cash out, and then repay back the loan with the money that they gave you, like because you want to already start establishing your own credit from day one. Which again, I don't know who he's talking to. So let's say if it is someone that's new, you want to already start establishing your own credit from day one, and then you can use an authorized user to help you inflate your score to get you there. But if you are somebody that already has credit, maybe becoming an authorized user may not help, because again, there's so many different things that affect your credit score, that the reason why you're not maybe getting up to a 800 credit score. Maybe you don't have a good pay history with paying your bills on time. Maybe you have a lot of debt and your credit utilization is high, and you have a lot of unsecured debt and installment debt. Maybe you're still new to credit, which credit history counts as the third strongest factor for Experian, at least. For TransUnion Equifax, that's something different, but that also accounts for your credit. So there's a lot that goes in order to get you to an 800 score to start off as a authorized user. It's definitely not the way. It's gonna help, but it's not really gonna help a lot. And I'll put a video either here or here, so you can see. I made a video about a credit report that I was able to find online of a credit report that we use to look at your application, so you can see the habits of someone that has an 800 credit score, and you will not see an authorized user. A lot of credit reports I've seen that people that have an 800 credit score don't really have an authorized user. So like this isn't really like a strong weight of like determining, oh yeah, you're gonna get to an 800 credit score. So yeah, that's I don't know why he said that, but well, let's go and continue.
Have to do is dispute any errors that are on your credit report. If you spot an error on your credit report, you basically have to report that. Why? Because it could lead to a huge boost in your credit score. I've seen sources say that about 25% of people have some type of error on their credit report that they are not aware of. This means that about a quarter of you guys have a credit score that is lower than it should be, just based on an error from the credit bureaus. This is what you have to do. You have to go to annualcreditreport.com and request your free credit report. This is the official site, you guys. Don't go to any other sites claiming to give you a credit report. And right now during the pandemic, they're actually giving away free weekly reports for all 3 credit bureaus. That's really amazing, you guys, because normally you only get 1 free report from each of these credit bureaus once per year. So what you guys should do is get your report for free and then check to see if there are any errors. This could be accounts that are listed as in collections, even though they're not. Misspelled names, wrong social security numbers, anything that is incorrect, you guys need to correct as soon as possible. And to dispute it, you can do it online, you can do it through the mail, or you can also call them as well. Online is probably the easiest, but each bureau is going to have their own system for disputes. I'll link them below, and all you guys have to do is follow that guide and wait for that correction to be approved. If you successfully remove a late payment or an account that should not have been in collections, I guarantee you that your score is going to go up dramatically. So this is one of those things that everyone tells you have to do it. You have to dispute anything you see on your credit report that is false. It also does not take much time and you can do it literally right now. So definitely recommend that. Okay, the third method for
Okay. The chances are of you having an error is true based off what he said, how common it is. I really don't see that really a lot, and I've viewed thousands and thousands of credit reports in my lifetime. So the reason why I say collections won't really work is, well, it's going to work, is going to increase your score, but it's not going to dramatically increase your score. Only because you got something removed doesn't mean that it's gonna increase it by 100 points. Like on Credit Karma, if you go onto Credit Karma and you find an error and you dispute it, it tells you that you can only get like around like 20 something points just to go ahead and for disputing it. And if you win it, or if you pay off the collection, it's gonna end up being like 25 or 20 points for paying it off. So it's like, that's not, it's gonna help, but it's not gonna be like a huge deciding factors, because the common people that end up having errors are people that are that have the same names. So like a junior, a senior, same names. What I mean is maybe they got confused with somebody else that has their same name. I've actually seen that happen. And those are like just the common ways that normally if you have a collection, like at least 8 out of 10 times is going to be due to it being a valid collection. So it'll help, but it's not going to give you the increase that you think it is going to give it to you. So let's go ahead and continue.
Getting an 800 credit score is to lower your credit utilization ratio. This actually accounts for 30% of how your score is calculated, and it's a powerful tool for raising your credit score in the short term. So first of all, what is your credit utilization ratio? It is the percentage of the total credit limit that you have used. So let's say you have one credit card and your credit limit on that card, the max you can spend at one time is $5,000. Now, if you buy something that's $1,000, that means you have used 20% of your credit limit. This means that your credit utilization is at 20%, and it's gonna stay at that 20% until you pay off the card. Now, the goal here is to keep your credit utilization ratio quite low. The credit bureaus really don't like it when they see you using too much of your credit limit, because that shows that you are more risky. Now, most sources say that you should keep your credit utilization below 30%, but I tend to keep mine between 2 and 10%. If it's too low, like 1%, that shows them that you just don't use your credit. And if it's too high, then that just automatically flags it as risky behavior. Now, what happens if your credit limit is too low and as a result, your credit utilization ratio is just always super high? Well, besides just spending less money, there are a few specific things that you guys can do. The first thing you guys can do is to just sign up for more credit cards. Each credit card that you add to your arsenal of credit cards is going to increase your overall credit limit. For example, one credit card could have a credit limit of, let's say, $5,000. And if you get another credit card, that could come with another credit limit of, let's say, $3,000. So instantly your overall credit limit went from $5,000 all the way to $8,000 just by signing up for that second credit card. The second thing you can do is to pay off your credit cards faster. So let's say with that same credit card that has that $5,000 credit limit, you use that to buy a MacBook for, let's say, $2,000. That means, bam, your credit utilization ratio is already at 40%. What you want to do right then, since it's above 30%, is to pay it off as soon as you can. Once you get over 30% credit utilization, make sure to pay off that card right away. And the third thing you can do is actually call your credit card company and ask them to increase that credit limit. This won't always work, but it really doesn't hurt to try. And yeah, I've called them and asked them to increase the credit limit, and they've said yes. So I definitely know that it is possible for some cases. There is a balance between never using your credit card and just using it too much. You want to show them that you use your credit card, but you don't want to show them that you use your credit card to make these really expensive purchases that you can't afford based on your credit limit. This has a huge effect on your credit score, like I said, 30%, and it's just going to get you one step closer to 800. All right, the fourth thing that you can do is to stop applying for credit.
All right, let's break down what he said. Okay, so what he said is half right. So what I mean about that is, so when you are when your credit utilization is high, it's actually just not your credit utilization that is high. It is also your it is just the amounts that you owed, because what he's talking about is from Experian, and how they calculate it. So let's take a look here. So you have right here FICO, which is um, which 30% accounts to the amounts you owe. So if 30% accounts for the amount you owe, that means then that is your credit cards, your unsecured loans, your installment loans. So that's all bunched up together. By paying down your credit utilization, that will help, but it's you also have to pay down your actual debt, which is what he doesn't explain. And then what he says is if you have a high credit utilization, just pay down the credit card. For most people, that's not going to be possible, because like the median income in the United States is 44,000 from what I learned. And if that's the medium income, like even somebody that makes $72,000 here in the state that I live, after taxes, you're taking about $48,000 a year, which is a little bit pretty much more above the median after taxes. But essentially, if they're already paying their mortgage or rent, which is the biggest chunk of their money, if they're single or potentially married, then and they have cars, they have credit card debts, you can't pay it all fast, because again, this video is called how to get your credit score to 830 days. And if you only make $2,000 to $3,000 per month roughly, and that doesn't really leave a lot of room. Like you may find like an extra 500, but let's say if you have $10,000 in debt, by just throwing $500 is not really going to lower your credit utilization. So for that advice, it doesn't work. And then now speaking at it from an underwriter perspective. Okay, so when I've reviewed people for a personal line of credit or unsecured debt, how much debt already um, out there they have will affect you from getting approved. Granted, he did say that, hey, just try just to try, which I don't blame him. I'm not gonna knock it too hard, but the thing is, why risk getting a credit inquiry, which I think he was about to just get into? Like, why risk getting a credit inquiry if you know you're not getting to get approved? Once you start getting over 30%, like for me, once I see people getting to like 60% of their credit utilization, between like that 50 to 60%, it's bad, because I'm like, okay, so you're not able to pay down your debt. Because I'm the type of person who's like, I believe if you have a credit card and you want to use it, that is fine, but there is a certain limit to your credit utilization. Once you start going over 50%, like to me, that is already a red flag that you cannot pay down these loans. So if you are, I would say, I'm gonna be even more like conservative or more strict. So if you're over 40% of your utilization, I wouldn't even I wouldn't even do it. Just because then you're gonna risk getting a credit inquiry when knowing you weren't gonna go ahead and get approved. So I do have some issues with that advice. Um, him giving that. So it's like, yeah, I'm gonna right before we get back into the video, I'm gonna show you how to go into Experian and find your credit utilization. If you already know it, then it's you know that is that. So let's see. Okay, so this is a client that I'm helping. Let me show you their credit utilization. All right. So here you go. Right now he's at 59%. That is an issue for me. So if you would apply then I wouldn't go ahead and give him more credit because he's already having a tough time just alone approving it. So essentially, where you want to go, because let me see, because I don't know if I'm gonna be able to show you, because also I don't want to show the person's name. Yeah, I can't show you, but essentially, if you just go to once you log in through Experian.com and then you click on, you're gonna look at the top, you're gonna see it says credit. You're gonna click on credit, and then um, actually no, it's actually just gonna be at your homepage. So I don't know why I'm making this more complicated. So essentially, once you log in, you're gonna see your credit score, whatever number it is, and then below that, you'll see that it says, actually no, I can actually just do this. I lied. I'm a liar. Okay, here it is. So once you log in, it'll take you directly to this page, and then you'll see your credit score, and then you'll see your credit utilization. So what you got to do is you got to start working towards that. And if you really want to get approved for more debt, you have to at least bring this to 30% or less. The less you have, the better. So that's what I wanted to explain here about that credit utilization, how he was half right. So to summarize it, um, you got to pay down your credit utilization and your other loans you owe, because again, that's what counts for your second biggest factor on Experian for your credit report, and get on a budget so then you can get that done and try to pay it off in 30 days to get an 800 credit score. But let's go ahead and hop back into this video.
At least in the short term. Every time you do a hard credit pull, your FICO score is going to decrease by a little bit. Why? Because when you open a new line of credit, they're going to do a hard inquiry on your credit. And this is going to show up in your credit report. It's going to stay on your credit report for maybe 2 years, and it's going to decrease your score by, say, 5 to 20 points for at least a few months. Now, that seems super annoying, and it is, but why does that actually decrease your score? Too many pulls shows them that you might just be applying for too many lines of credit that you might not be able to afford. Simply put, it's just associated with more risky behavior. So what you want to do is you want to keep your pulls to a minimum. Only apply for the things that you really need. Now you have to remember that this only affects your credit score in the short term. And actually in the long term, opening up more accounts could really help you if you pay off those accounts on time. This is what I do with credit cards. Like, you guys, I have at least 8 credit cards right now, and I do have a very high credit score. Now, one thing you guys have to keep in mind is, let's say for example, you are trying to get a mortgage and you are shopping around for different quotes. All these inquiries are about the same thing, a mortgage. So they're not going to actually count them as separate inquiries. As long as you do them between a 14 to 45 day period, all these inquiries are going to count as one. So if you're shopping for deals, if you're shopping for rates, make sure to do them all together at the same time. Now, moving on, if you're planning on applying for a mortgage or a car loan where you really want the lowest interest rate possible, it'll probably make sense to not apply for any credit cards in the months leading up to it. Because when you apply for those credit cards, it's going to take a short-term hit on your credit score. And therefore, when you're applying for, let's say, the mortgage, you might not get the best rate you could. So yeah, just keep in mind that the number of times you actually apply for credit is going to actually affect your score in the short term. Number 5 is something that a lot of people actually don't know about, and this is Experian Boost. Basically, Experian Boost helps you build your credit based on your past utility and phone payments. Generally, these credit bureaus, they don't care if you made these phone or utility payments on time. Like, that really doesn't affect your score right now. But Experian has this free program that actually allows you to connect a bank account, and they're going to scan that bank account and see if you have made these payments on time. And when they find these on-time utility and phone payments, they're actually going to use that to help calculate your score, and your score is going to go up. They claim that the average boost in credit score is 13 points. And guys, this is very fast. It's very easy to do. So I definitely recommend you guys all do this. Note that when you're applying for credit, these lenders, they don't only look at your Experian score. They're also looking at your TransUnion and Equifax scores. So by doing Experian Boost, you're only boosting your Experian score. But overall, it can still help you a lot, because most lenders, they're going to take your middle score of the 3 as the score that they use to determine what interest rate you get. So if that happens to be the Experian score that is boosted by X amount of points, then that's really going to help you out. And this is not sponsored by them in any way. I just think this is a really cool service that not too many people know about, and that's why you guys should try doing this right now. Okay, the number 6 tip for getting an 8.
Oh my god, if you guys have been watching my channel, you know how I feel about Experian Boost. Not sponsored either. So Experience boost, wasted time. Do not get it. Like, why would you want to give a company that has enough information on you access to more information about you? Enough about that. Um, enough about that rant. And again, for measly 13 points just to hand over. Okay, the Experian boost is exactly like a credit authorizer. Like, we don't care as underwriter, and neither does the credit algorithm. Because again, if that was the case, Experian would make a Experian boost worth more to your credit score. What they really care about is your payment history and the amount you owe. So only because you're paying your utilities, your phone bill, your internet bill on time, that's not going to get you to an 800 credit score. Like, it's just not. So for him to say this, to go ahead and get experience boost, it was a waste. It was definitely a waste of advice, and I definitely I wouldn't I wouldn't get it because again, at least looking at it from an underwriter's perspective, when we see that stuff on your credit report, we don't care. Like, okay, great, he's paying, he's paying his phone bill, which you're going to pay. Like when we're looking at someone's application, especially when we're looking at their credit for like an auto loan or a mortgage, like the last thing that's in our mind is, are they paying their phone bill? That's not gonna be a way in to make or break a deal because you repaid it. So because we don't care about those utilities or the Experian boost, like we're not gonna hold you accountable to that. So yeah, so that's a little insight for you guys. I threw a little gem for you guys, something you guys don't know. But yeah, let's go ahead and hop into this next video, or to the next part of the video.
800 credit score is to set up auto pay on all of your accounts. This is the most important point in this whole video. As soon as you open an account with a credit card, a car loan, whatever it is, make sure you set up auto pay right away. This is crucial because it's going to make sure that you never miss a payment ever. So to do this, you'll log into your account, and it's going to be different for every single company, but you're going to find where you can set up auto pay, and you're going to connect your credit card or your bank account with your routing and account numbers. Do this for your rent, do this for your car loan, and especially do this for your credit cards. This is where most people mess up. They just simply forget to make a credit card payment. And I totally get this, like, it's very easy to miss a payment on a credit card. And I know a lot of people that unfortunately have quite low credit scores just because they forgot to make a payment on a credit card, and that severely hurt their score. Literally, an 800 credit score is only attainable if you don't have any missed payments in the last few years. Like one single missed payment that you can't dispute, and your credit score is not going to become an 800, at least not for a while. This is the single most important thing that you guys need to start doing today to drastically improve your credit score. You want your on-time payment streak to be as long as possible. If you think about what your credit score is, it's just basically the credit bureaus trying to determine whether or not you will make your payments on time. An 800 score tells people that you are going to make your payments 100% of the time, and that is why this is just so important. So yeah, that is it, you guys. So if you
I think he could have framed that better. So, auto pay is not the most important thing. Your payment history is the most important thing. Having auto pay will definitely increase the chances of you always having, for you to be making your payments. But always keep in mind, if you decide not to have auto pay, it takes about 30 days before it gets reported. So if you think you may have missed it and you receive like a letter or a phone call, normally you get a phone call or a letter through the mail before it goes 30 days past due. Because again, the bank, the financial institution just wants their money. So it's like, this score is a little, or this advice is a little shaky. So it's like, it's not like the most important. By doing it, it'll be like a credit, it'll be like an authorized user. It'll just help you a lot more if you do auto pay. So definitely not bad advice. Um, the key takeaway from this is, if you really want to get to a 800 credit score, is always pay your bills on time. Actually, before I get to that, it is actually attainable to get your to get 800 credit score. If you have a missed payment, it's going to be that same video about credit habits. There was this person that went ahead and missed his payment and was able to still obtain a credit bureau. So after this video, it'll be somewhere up here. So watch it after this. So yeah, so the key takeaways of this video is just pretty much payment history on time, pay down your debts. That includes your installment loans, like unsecured loans or personal loans, or signature loans is the terms people know. If you have an auto or a motorcycle or a boat, your mortgage is obviously having a house loan is a little bit more harder to pay down versus an auto. So paying that down, making sure that you get to like a 10% credit utilization and below will optimize to help you get to that 800 credit score. Patience. I know this doesn't really do much, but in the long term it will. Like, this is not something that you can just get in 30 days. I promise you this. You can't get a credit score in 800 credit score in 30 days. It takes so much time to go ahead and get there. So definitely having the patience to just let you know this is a marathon, not a sprint. So those are the key takeaways from this video. So let's go. All right, let's move on to this next video.
Guys, I didn't start building my credit score until I was about 24 years old, and I used cash for pretty much everything up until that point. So in today's video, I'm going to share with you how to rebuild and how to take your score from 0 to hero, just like that.
How you do that?
Actually, what is my credit score? Oh wow, almost 800. Not quite perfect, but I'm
on the way to being free.
Andre Jick, and welcome to my YouTube finance channel. And whatever you do, do not turn on auto subtitles because YouTube thinks my last name is. Thanks, YouTube. So in today's video, we're gonna be talking about credit cards. And I know there's a ton of these videos out there on YouTube, but hopefully none quite like this one, because by the end of this video, I'm gonna give you an actionable step-by-step plan for repairing your broken credit or building it from 0 all the way up to 700. So cash back, starting off with everybody's favorite, is 5% cash back on things like groceries, gas, and retail. You can then use that money as credit to pay your monthly balance. And that word you're gonna hear a lot throughout this video and generally throughout the credit world. And that means how much money you owe at the end of every single month. Roadside assistance. Not a lot of credit card companies advertise this one because they don't want you to know about it, but many major banks like Citibank, Chase, Capital One, and Visa all offer roadside assistance. And this can include boosting your dead battery, helping you with a flat tire, delivering fuel to you in case you run out of gas, or towing your car entirely if it just breaks down in the middle of the freeway. And the best one, and my favorite, if you're an idiot like me and you lock yourself out by leaving your keys in your car. All you have to do is call them up on that number on the back of the credit card, and they'll come and help you right away. Hello, that's me again. I left my keys in the car. Come help. Travel rewards. Now, some credit cards, instead of giving you cash back for every dollar you spend, they'll actually give you a mile of travel to use toward. So here's what I want you to do. The first and most important thing is never carry a balance, and always pay off your credit card in full every single month, no matter what. This is the first level we have to beat, and it accounts for 35% of your entire score, which is huge. The first thing I want you to do after receiving that secured credit card is go online. It's super easy. Set up auto pay. That way you'll never forget, because if you don't, you will forget. Because I did. But the great thing is, if you forget once, that first month is something called the grace period. All you have to do is call them up and be like, hey guys, I'm really sorry. And you do have to apologize, and they'll forgive that one time. But after that, so the next level you have to beat is level 2, and that is the utilization rate, which means the amount of money that you use every single month versus how much money you have access to. And if you want that excellent score, you should use no more than 10% of your total monthly allowance. So going back to that secured card.
Am I crazy? Didn't he just say never carry a balance, and now he's saying don't use over 10% of your credit. Let me know in the comments. Is he for real? Like, is that what he said? I'm pretty sure I heard him say, don't carry a balance. But now you're saying don't use more than 10% of your credit utilization of your credit cards. We off to a great start, baby.
You initially got. If you put in $100 and that's how much they gave you back as revolving credit, you should use no more than 10% of that, or $10 a month for an excellent credit score. So that's why I explained, depending on how much flexibility you want, like let's say if you want to buy groceries and food with it, maybe you should have a slightly higher deposit so you give yourself a little flexibility. However, one lesser known trick that I didn't know about is that theoretically, if you had nerves of steel, you could just give them $100 and then once a month, literally just once, buy a pack of gum for $5 every single month, pay it off, and just with that one trick alone, build yourself an excellent credit score, assuming you do everything else correctly. Now, just for transparency and example's sake, I have about 5 or 6, maybe 7 credit cards, and across all of them, I have about $40,000 available to me every single month. That means I should be spending no more than $4,000 or 10% of it. This accounts for 30% of your entire score, which is huge. Don't neglect this one. People forget about it. Oh, and also don't cheat and think you're clever by spending $0. They need to see at least 1% utilization rate every single month. The third level you need to know about, you don't need to beat it, but you should still know how, is types or variety of credit. Now, this sounds complicated. I promise it's really easy. There's just 2 of them you have to remember: installment loans and revolving credit. Installment loan is anything that you borrowed money to pay for. So this includes things like your personal loan, your college loans, your car payment, your mortgage, anything like that. Also, your phone and your internet bill do not count, okay? And also, don't get confused. You do not need to use your credit card.
Just really quickly, just in case, because you only named a couple of installment loans. Let's see if you have a boat loan, motorcycle loan, an ATV, a UTV. Those also count as installment loans. So something that not a lot of people mention. So let's get back into it.
To pay for these, okay? They just want to see that you're able to borrow money from someone and then consistently make payments. They don't care how, as long as you do them and you make them on time. And the other type of credit, your revolving credit, get it because it spins, that's all of your credit cards. So you're pretty much taken care of. If you're watching this video, you already have a credit card or you just got one. Now, both of these, installment loans and revolving credit, make up just 10% of your entire score. So please, don't go buying something and getting yourself into debt just to please your credit score. You don't need it to build an excellent score. And the fourth level to master is the number of inquiries. Now, when I first started applying, I applied to 8 credit cards.
Cause I'm dumb.
And I got declined by all of them. And they make up 10% of your credit score. So anytime you inquire about borrowing money, they inquire about your credit report and your score, and that dings you. And again, although it's only 10%, they add up fast. And the worst part, they take 24 months or 2 years to fall off your report. In fact, I still have 2 of them waiting to fall off of my report. So at any given time, please don't apply to more than 2 credit cards at any given time. Trust me. And the last level to beat is kind of the ultimate boss, and that is age of history. This is the one that hurts me the most because my history is pretty young, but you can get to 700 and beyond with just 1 year. But if you want to get to that 800, that's really, it's going to take you 5 to 10 years to get to that point, because this accounts for 15% of your entire credit score. Now that you know how to use your credit cards like a boss, you need to know how to check your credit score. You can do this by performing what's called a soft inquiry, so as not to arouse your score by performing a hard inquiry. Remember we talked about those, they ding your score. So you can do this by downloading the free Credit Karma app. It's simple, it's easy to use, I use it all the time. And also, your credit cards sometimes allow you to check your score for free without penalizing you at all. And when you check your score, you may find as many as 3 different credit scores from the 3 different credit bureaus. They are TransUnion, Equifax, and Experian. Together, they will average to make what's called the FICO score, and that's the score that gets reported to lenders when you borrow money. Your score will range anywhere from 300 to 850 when you average to make what's called TransUnion, Equifax, and Experian. Together, they will average to make what's called the FICO score, and that's the score that gets reported to lenders when
that is not true. Each of those entities has their own separate credit score. So you have TransUnion and Equifax, which use Vantage, and then you have Experian that uses FICO. So that's not correct. So just because when you go on to Credit Karma, you'll see that score. But then also when you go to Experian, you'll go ahead and also see the FICO score that's mainly through Experian, and then TransUnion and Equifax have other different credit score modeling. They don't fall under FICO, so that is not correct. But hey, I'm not the one that has almost 500,000 views on a video. Get me there, baby. Get me there. Like and subscribe. Almost to 50 subscribers. Really excited. Thank you everyone that's been subscribing.
when you borrow money. Your score will range anywhere from 300 to 850. Now, anything that is 750 and beyond is going to get you that prime rate when you borrow money. Anything that is above 750 is just for showing off. So quickly, here are some things that do not affect your credit score whatsoever. How much money you have doesn't matter. How much money you make doesn't matter. I used to think it mattered, but it absolutely doesn't. Smashing the like button, it doesn't matter to them, but it matters to me, so smash the like button. Using debit cards or gift cards to build your score, no, they will not. And lastly, using your credit card at a gas station, no, it will not hurt your score. And if you follow all of these steps for 9 months to 1 year, at the end of that, your credit score should shoot up to 700 and beyond, at which point you're going to get flooded every single month with credit card offers and banks throwing money at you. For the most part, I want you to say no.
He had me. He was doing so well right up till that last statement. He says, you cannot get a 750 FICO score within 9 months. That is just not possible. So instead of explaining it to you, I will show you here in a minute. So do not leave, because I'm gonna just show you, just so you understand when it comes to building a credit score. It does take time, and especially if you're still new to it, because the thing is that Eve looking at it now from an underwriter perspective, not from a perspective of building credit. So if you do get if you end up being at a 750 credit score, that doesn't really mean nothing to us as underwriters. What really matters is your credit experience, your pay history, because that's the whole point of us giving you a loan. Are you going to pay us back, and do you have already established accounts showing that you've been paying other financial institutions back? So just having a high score doesn't really mean anything. You can still be deemed limited credit. And what is limited credit is people that have not established credit, so they don't have anything reporting, or they have less than two credit accounts reporting on their credit reports, and it's like under 2 years. That is considered limited credit, just because it takes a while before you end up getting out of limited credit or thin credit. So that is just when it comes to that, it's very when it comes to those type of credit scores and how fast you can get to those credit scores, it just amazes me how they will sit there and tell you this without providing the source. Because that's one thing is like, okay, how do you know this? And are you just repeating everything that every other financial guru on YouTube says? So, yeah, but let's go ahead and hop into this for me to show you why within 9 months you will not get a 750 credit score. So, all right, right here is, this is called a FICO score estimator. So pretty much this is just an estimate to be able to get you to be able to give you like a credit score by answering certain questions in this box. So we're gonna go ahead and go through his metrics. He said within 9 months of getting to a 750 credit score. Let me see. Yeah, he didn't really list anything more. Yeah, so like after 9 months. All right, let's see. Let's give it a shot. Here we go. All right. So, how many credit cards do you have? We're gonna say one because that's what he said. He said you didn't really need like your first credit card, or you didn't really need to have a lot of credit cards. All right. There's no option for 9 months, so we're gonna have to go between 6 months to 2 years. So it's definitely going to be very interesting to see, because it looks like we're not going to be able to maybe get up to 9 years. All right, so how long ago did you get your first loan? So we're going to try to shoot for that 9 months. No 9 months, but there's that 6 months, 2 years again. How many loans or credit cards have you applied for? Let's just say in the last year. We'll just say one. How recently have you opened a new loan? We're going to say 6 months. Not 6 months ago, 36 months. I would say we're just gonna go 6 months. How many of your loans and or credit cards currently have a balance? 0 to 4, because we're assuming you have an auto loan and a credit card for this scenario. Besides any mortgage loans, what are the total balances on the other loans and credit cards? So let's say you don't have no balance, but let's say you use like an average amount of what's the average auto loan in the United States? Average auto loan in America. Let's go, baby. Consumer. For use, we'll just go use. So we're gonna use 21,500 instead of using 34, because that's gonna hit you hard. So see, I'm already being a little biased. All right. When did you last miss a loan or credit card payment? I have never. So perfect payment history. How many of your loans or credit cards are currently past due? 0. What percentage of your total credit card limits do your credit cards balance represents? I'm going to say 0 to 9%. All right. In the last 10 years, have you ever experienced bankruptcy, repossession, or an account in collection? All right. We're going to say no. And let me see. What do you guys think in the comments below? Put it down what you think. I'll wait a minute and just wait for you guys. 30 seconds. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. Okay, you guys were taking way too long. All right, give me a drum roll. Let's see if you get to a 750. Wah, wah, wah. Between 695 to 745. And again, this wasn't even using like the actual 9 months, so it was a little biased. So I didn't determine like it was between that 6 months to 2 years that we were clicking a lot. So yeah, he's a big fail. And again, you guys saw I wasn't really trying to like like I wasn't trying to sabotage it and be like, oh yeah, for him not to hit it. Like I was literally, making sure that, make sure, we didn't have any balances. We never missed a payment. The biggest thing is just having an auto loan of $20,000 and above, because again, I just used the average amount. So yeah, so not really off to 750, but again, this is what he said. I'm only saying what he is saying. So yeah, man. So there you go. I'm out here exposing this advice. So let's go ahead and move on to the next video. Let's take a look here. Whoops. All right.
Hi winners! Look, welcome to Terry's Tips, guys. Do you need some money, but you keep on being denied because you have bad credit, low personal credit scores? Guys, I have you covered. In today's video, I'm going to talk specifically about loans you can get even with bad credit, insufficient credit, low credit scores. Guys, get a notebook, get a pen, guys. And these loans are anywhere between $1,000, guys, up to $50,000. One of them actually goes up to $100,000. Yes, y'all. So in this video, I'm going to talk about the types of loans you can actually get, some of the basic requirements, what you can use the loans for. And do y'all want a bonus? I decided to add 7. Yes, 7, y'all. 7 lenders that actually approve these types of loans. So for my newbies, welcome. Guys, make sure you subscribe because this channel is about wealth building, how to leverage your personal and or business credit to get the big money, 5 and 6 and 7 figures. Subscribe, share, like, guys. And it doesn't matter whether you're a consumer or a business owner. Let me pause you real quick. Even though these loans are technically for personal credit, guys, very first nugget, okay? Even though they're technically for personal credit, you can use them for personal and or business use. Read in between the lines, guys. So it doesn't matter whether you're salary, W-2, entrepreneur, investor, independent contractor, a little bit of both. Guys, these lenders and these loans can be used for all of you. Okay, guys? And I'll do my nugget at the end. So let's jump right in. So first, guys, and always remember this too. If you have bad credit, okay, we're going to talk real for a minute, okay? If you have bad credit, then you're going to have to listen to the requirements, right? And do some of your due diligence because you're going to have to be strong in other areas, right? I'm going to be real with you. Also, another nugget right here, don't expect to have a 500 credit score and get like 50,000 with like a 3% interest rate. I need you guys to be realistic with, if you have bad credit, you are high risk to a lender. So these lenders will work with you, but you're going to
I already love it off the top. She's providing you with expectations. Got bad credit score, do not expect a low interest rate and a high loan amount approval. That can vary based off if you've already had really high loans before, but you just have a low credit score. But there's a lot of nuances and a lot of when I mean nuances, I'm meaning like there's a lot of other things that need to be in check in order to approve for a 50,000 loan or something really close that you've had in the past. But so far, she's starting off good. I love this. I love this.
have a little bit more aggressive terms because you have bad credit, right? And then you work on your credit. Look, nugget, right? While you're using this money for your wealth building or whatever you're using it for, work on your personal credit so you don't always have to have terms like this.
Baby.
All right, guys, so let's talk about the types of loans. Okay, 5 types of loans you guys can get with bad credit. Write these down. So the very first one is obviously an unsecured loan. That means you're going to apply for the loan. You're going to get a set amount. Like I said, these lenders go anywhere from $1,000 up to $50,000. That's going to depend on your income, your debt ratios, how much you ask for, where on this bad credit spectrum you actually are, right? And then you pay it back, but you don't have to put any kind of collateral up, no kind of co-signer, no kind of personal guarantee, anything of that nature. So it's unsecured. You can use it for whatever. That's the flexibility, guys. Now, the second type of loan.
All right, let's break out that unsecured loan. So definitely I like it that she lets you be aware that income and debt to income is a factor, even though they're pretty much, you can't have one without the other. You can't have income and then have a DTI ratio. So that's good to know. So that's something that that you do need to be aware of. I'll put a video up here going over that. It's just a short explaining what debt to income is. But essentially, so when it comes to unsecured loan and you're trying to get for it, because she's just talking about a score. A score is, okay, half the picture. So if there's somebody that's going to approve you for those type of loans, they know to expect a low credit score. But the thing that now you need to realize is, have you reestablished credit since then? Because you can have a low credit score and reestablished credit. So what I mean is, do you have any other loans, or the loans you already have you been paying them on time, or maybe you didn't go past due and you just like had collections and you just been reestablishing. So essentially, like, do you even have any more collections? How much those collections are? What type of collections they are? Because I'll let you know, if it's an unsecured collection, there will definitely be a lot more hesitant to approve you for one, because they're like, he's had one in the past and he let one go. I was like, he's already showing that he can't handle an unsecured loan, and we don't want to take that risk. And then stepping into your payment history is like, okay, like I was saying, have you been paying all your loans on time? Are you past due? Your credit cards, how much utilization are you overall? How much unsecured debt that you have? So like the unsecured loan she was talking about, that counts as unsecured debt. Credit cards also, even ones that you have towards this credit card. So like if you have one towards like Dillard's or Best Buy, those still count as unsecured credit. Anything else? How many accounts have you already opened recently? Your inquiries, have you been aggressively applying and then you're just not getting approved for that? So there's a lot of stuff that goes into approving somebody with bad credit, because the last thing you want to do is give them a loan and they're just not learning their lesson, and they end up just not paying the lender back and charging off the loan. So that's one thing about unsecured to go ahead and be aware. So let's hop into the second one here.
Loan, guys, is obviously a secured loan. So this is where they're going to ask you to put up something, and what that something can be, it is going to vary. Sometimes they ask you on these applications what kind of assets, what kind of collateral you have, and maybe like you're too shaky, or maybe your income is shaky, or maybe your debt ratios are shaky. So they'll say, well, we'll work with you, but we won't give it to you unsecured. We need something to secure it with, right? And that could be any kind of asset, and then obviously you pay the loan back and everything is fine. But if you don't pay it back, y'all, then they can actually, keep that asset or go after your assets. Okay. Now the third type, right, is a home equity line, or like a home equity line of credit, or a HELOC, right? Now, guys, even though this is kind of, they are saying like, this is kind of for bad credit, like you still want to be, you have to be kind of like in the mid six, especially in this climate, right? We're in August 2022. You really do need to be like at least like a 630, 650 to even try to do a lot of the home equity lines or the HELOCs. But it's included in here because, guys, that term bad credit, like some lenders think a 680 is bad, right? So that means that they're approving you at a 650, they're still considering that like a subprime loan, okay? So home equity line, HELOCs, that falls into like the type of loans you guys can get with kind of bad credit. Sometimes because you have the equity, you're not taking the full amount, that can actually help you get approved. All right, so the next kind, guys, and these two, I'm gonna lump them together. So I said unsecured loans, secured loans, HELOCs, home equity lines, and these last two, I'm gonna lump them together. Payday loans and car title loans. Guys, now I'm just gonna be honest. Even though I'm going to give you all the types, right, I don't recommend them because the terms are super, super aggressive. Now, if you have a dire emergency and you just need the money, then you do what you have to do. But pay it back as quickly as possible, right, and definitely don't default. But if you own a car, you have a car title, then you can put the car title up for it. That's a different kind of loan than collateral, because collateral is more broad. They'll kind of use equipment. Sometimes they'll use stocks, bonds. Sometimes they'll use 401k. Sometimes if you own property, all kinds of things. Whereas a title loan is specifically for car title.
All right, let me explain a little bit more of the collateral that she was saying. So like 401k, stocks, and bonds, those are not really as traditional routes that like me and you would go apply. So a secured collateral would be like a car, like you stated, a motorcycle, a boat, a ATV, also a jet ski, can go ahead and be used as collateral. And then if you have like a CD, certificate of deposit, a secured loan, you can always get a loan against the certificate of deposit. So those are more of like common type of loans that people will get. Not really like into stocks. That's a different type of underwriting that doesn't really fall into consumer, but it can be a consumer. It's not something that you can just walk into a bank and just be like, hey, I have like a $50,000 portfolio full of stocks and bonds. I want to get a loan against it. It's not like that. So just to clear that up and give a little bit more clarification when it comes to a secured collateral. So let's get back to it.
And they can be more aggressive. Now, I will say this, guys, the 7 lenders that I'm outlining aren't as aggressive as some of the other lenders that are out on the market, but you're still going to have higher terms, right? And the payday loans, same thing, like super aggressive terms, dire emergency, okay? So those are the 5 types of loans. Now, guys, this part, write this down, what you can use the loans for, because it's huge variety. Right now, I want you guys to be strategic when you're filling out the application about your reason why, even for personal, guys. So I wrote them down. So you can use them for moving, for debt consolidation, for medical expenses, a medical emergency, for weddings, for fertility, guys, right? So fertility, people are going through it, and God bless you if you're going through something like that. You have fertility issues. It could be super expensive. Sometimes everything isn't covered by insurance. So you can actually use a loan like this for that. Education. Now, education really isn't college, even though technically if they just give you $20,000 and use it to pay for a semester, they wouldn't technically really know. But education is more like if you're sending your child to like a private school or a charter school that has fees. They're looking at, elementary, middle school, high school. So education, guys. Adoption, motorcycles, RVs, home improvements, landscaping, even solar, guys, right? So this is where, sometimes those solar panels and all those things on houses can be energy efficient. So you guys are kind of being strategic, but you can't pay for it all. You can use some of these loans for that. Auto refinance, and also for like a newer used car, refinancing a car. So a bunch of different varieties, right? I hope I gave you guys a bunch of different items. And obviously, guys, to grow a business, marketing type of things, but you still have to be strategic about the reason.
Let me give some clarification about moving expenses. If you're getting a loan for moving expenses, be very aware. So like if you're moving within your city, or within the state that you live, that makes sense. But if you're moving out of state, there's going to be maybe more qualifications or more conditions that you need to meet for the loan in order to get approved for that loan. Like one of them would be like, okay, well, if you're moving out of state, are you still going to have the same job? That's something very important. That's very important to an underwriter, because we're like, okay, well, we don't want to give you this loan and then we don't get paid back because you don't have a job. So like that's something to pay attention to. And then also, what was I going to mention about the moving expenses? Like if you're outside of like the footprint, so essentially like if you're outside of the area of where the lenders can go ahead and lend money, you can get declined from that loan. I would decline tons of loans that people would be outside of the bank's footprint. So let's see if there was like a bank in California, but you're moving to let's say Philadelphia, like, and then the bank only resides in California. They're not going to approve you for that because you're outside of their footprint of where they can go ahead and review your application, because they have to follow guidelines and regulations and laws and all that blah 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 stuff. So that is something to know about like moving when you're getting a loan. So just be very wary about that. That would work in a case like Wells Fargo. Wells Fargo is kind of everywhere. So is the Bank of America, Citigroup, other banks that are around the nationwide. So yeah, so I would be very precautious. If you're going to apply for those type of loans, make sure that your state that you're moving to offers that bank is somewhere within there. So let's get back to it.
Why you're asking for the money, guys. When I give you these lenders, and depending on when you're watching this video, guys, I'll go back into the description and put the actual companies and links, guys. Before you apply, click on the links and look for the different allowable types of uses. I said 7 lenders. That means that they are going to vary as far as what they consider to be bad credit, how fast they'll fund you, and what the uses are. So pay attention to what you're actually applying for. Now, I will also say this nugget right here, guys. Even if you file bankruptcy, yes, y'all, even if you file bankruptcy, some of these lenders will actually approve you 12 months. 12 months after like a discharge or dismissal. The industry standard is usually that you can get approved like 24 months, but just keep that in mind. That's why these lenders I'm outlining specifically are for, kind of bad credit or kind of rebuilding your credit. All right, guys. Now, what I want to talk about, some of the pros and cons. Let me just add this real quick for you guys. So most of these companies are online lenders, right? So they're going to be way better than the traditional banks. They're going to be, fund faster, less documentation, way less lenient, kind of requirements to actually approve you. However, they're going to obviously have sometimes loan origination fees, higher interest rates. It's because you have bad credit. You kind of get what you actually can get, use it wisely, pay it back, and that can actually even help you kind of grow your credit score also. The other thing I want to say is that they'll fund very fast, high rates. I think that was it. Oh, and a fast decision. So many of these lenders, guys, they have like a 3-part decision process, meaning like you literally apply, you fill out an application, do your documentation, and you get funded super, super quickly. Now, mind you, some of them, I wrote them down, some go up to 35,000, most go up to 50,000, and one of them actually goes up to 100,000. And one of them actually had on their website, sometimes they'll kind of vary, it will say personal loan, auto loan refinance, or small business loan. So because these are online lenders and not traditional banks, guys, they have more flexibility. What I want to say to all of you, okay, is when you're going to the websites, guys, I take the time to put the information in the description of the video. Nugget. Guys, always go to the description of my video. That's where I put links for any of my programs and do strategy sessions. If I talk about lenders or email, I always put it in the description of the video. Okay, guys? So when I'm doing that, some of these companies actually will do a what? A pre-qualification. That means they'll do the preliminary application as a soft pull, guys. And then if you get approved, you can move forward. If you don't get approved, guys, stop right there. So nugget. Pull your credit reports before you apply for these loans. Second nugget, when you're applying, so I'm outlining 7. Guys, when you're applying for the items, look before you click the little button to get started. If it's going to be a soft inquiry, it will say apply now with no impact to your credit, or no hard inquiry, or soft pull, or get a decision without impacting your credit score. It will say something of that nature. That means it's a soft pull preliminary, but then when you do an actual application, that's when they do the hard pull to kind of pull everything, okay? So you can be wise, right? I think there's like 5 of them that actually do the soft pull, so you guys can like be strategic about applying for those items and then only moving forward if you actually get approved. Now, for qualifications, guys, one of the lenders even says you only have to have a 300 and above. I was like, I don't even know if I believe that. I'm gonna be real with y'all, right? But a 500 to 600, they'll approve. Obviously, the higher your score, the better terms and more money, guys. If you can do a couple of things, delete some inquiries, delete some, dispute some medical bills, things of that nature, then do that so you guys can get more money. Pause. Guys, you can schedule a strategy session with a board certified credit consultant on my team.
Let's talk about that. Okay, so if a lender was going to give somebody that has a 300 credit score a loan, most likely they maybe don't have any credit. Let me see. Maybe they're still new to credit. I was like, it's very rare for me to have seen like a 300 credit score, so I don't know. So maybe she is right that there isn't, because I'm like, normally you would be at really that low for just having late pays and having collections, maybe filing bankruptcy, like those things. I can see it taking you down to a 300. So I was like, there isn't really going to be anything like, oh God, like, yeah. And then her talking about like the credit scores, only because you have a high credit score doesn't mean you're going to be able to get approved for more money. Like, it takes credit experience in order for you to get approved for these high loans. So if you've only ever had a $10,000 loan, don't expect to jump to a $35, a $45, or $50,000, or even a $100,000 loan. Like, you have to make your way up. That's like someone applying for a CEO position that's never had any experience being a CEO. Like at first you have to like be associate, be a manager, be a VP, and then be maybe a regional VP, and then be within the executives, and then work your way up to being a CEO. Like it takes levels before you can just hop in and just be just get a CEO job. So it's the same thing with loans. Like you have to build yourself. So if you have only had a $10,000 loan and you're trying to get to a goal of 50,000, I would definitely say build yourself up with 5,000 increments. Sometimes you can do a little stretch. There's never really no right or wrong answer, but I would definitely say just jump up every 5,000. Okay, I guess there is a wrong answer. Like you can't go ahead and ask and jump it from 10 to 25,000. That's too much of a big of a gap. You need something to close the middle when you're trying to ask for a loan that's jumping 10K, which is why I say do 5K. And again, you have to have compensating factors if you had bad credit. So that means like a low DTI, a low debt to income. You want to go ahead and have your credit reestablished. So that means no collections, no missed payments within the last 2 years. Also not being currently past due, not having a lot of high credit utilization, being stable with your job, so not switching a lot of jobs, because stability is very important for us. We want to make sure that, and also like you're getting money consistent. And if you're just jumping around from like being at one place for a year, then another place 6 months, and then another place 7 months, like that looks really bad. So yeah, so it's like those are things that you can go ahead and be looking into, so you can go ahead and just have compensating factors. So yeah, let's go ahead and hop into the video. We're almost done here.
And we will do a one-on-one hour with you and tell you exactly what you need specifically for your reports. I think, who was it? Shout out to Marshall. He just did one like a couple of weeks ago and got 52 points in like 2 weeks. Yes, y'all, my team are beast. Okay, so information in the description of the video, and I have a bunch of free videos on my YouTube, guys, about how you guys can actually repair your credit on your own. So they're going to obviously, so requirements, guys, write these down. Obviously going to need your ID. They need to verify who you are, right? Especially because you're doing an online application, not walking into a bank. Now make sure all of your information on your ID matches your credit reports. Now pause. Some of y'all get denied right there because your credit report has one address and you're submitting an ID that has something else. Then y'all be in my comments in my videos saying, I can't get no money. And it's not even your credit. It's because your stuff doesn't match. So check that. So ID. A big thing, guys, is income, especially.
I've never declined nobody for an. Okay, that's a lot. I've declined somebody for an address, but it would be like, let's see if they were applying for the bank that I was like working for, but they lived like in Guam, which is a U.S. territory, or the Virgin Islands, which is also a U.S. territory. Things like that. Yeah, like we'll decline your address if those are in those instances. Sometimes also if we don't have footprint within like the Indian reservation, like that's also a thing too. So it's like I can see that, but just common, like, because let's say if you were off by a number, we won't decline somebody. We're like, oh, okay, provide a proof, not provide a proof, but provide, well, maybe with those lenders, since they're bad credit, yeah, most likely they'll want proof of address. So they may ask that, or they just may go ahead and ask, oh, okay, can you have him verify his address? It looks like there's just not a mismatch. So things like that. Maybe if you miss like an apartment number, that'll happen. Maybe you put street instead of drive, or park place instead of boulevard. So it's just like things like that. But just as like a normal as a normal thing for underwriter to decline, yeah, that's not. I don't know what she's talking about. So that's very interesting. But I do want to give her props for offering credit consultation. I think it's really great. She's trying to help. A little, her information is a little shaky, so I'm not too sure, but yeah, I'm definitely gonna give her props for that. She offers that. She has board certified credit counselors, which is really great. I used to be a certified credit counselor, so I definitely understand that aspect. So let's get back into the video.
If you have bad credit, you're going to need to have verifiable income, pay stubs, W-2s. If you're self-employed, bank statements, possibly taxes. You must have verifiable income because they want to know that you have the ability to pay it back. Obviously, you know, the credit scores between 500 and 600. Some say down to 300, but if you could be like a 600 to 650, you're going to have way better chance of getting approved for more money faster. You have to have a valid email, valid checking account, bankruptcy is at least 12 months old, no public records in the last 12 months. And I think that's like mostly about it, guys. As I said, check your reports before you actually apply, and write this down. So the 7 lenders, let me give them to you real quick. So the very first one is Lightstream. I'll put it in the description of the video. Lightstream. The next.
Wow, is that it? So I think right now she's gonna go over the lenders, which again, we don't need to watch that. Like, if you want anything, just go in the description and find that out. Like, the only important information that I think she made that was very crucial is your income and your debt to income. Like, she presented the credit score. I know some lenders will say, hey, you need a credit score. But also, it's like, it really depends on the type of credit score that you use. Because I'm about to give you here some advice on credit scores. So have you ever ran into an issue? You're like, well, like, my credit score says 700, but the lender is saying, well, we see 650. So there's like a discrepancy between what you see on your credit reports. So I'm gonna give you here a secret of how to know what kind of lender, what kind of credit score they use, and this is something for you to ask them. These are the additional FICO scores that mortgages use. So okay, so you have credit cards, auto, and then you have mortgages. So the ones that they use is one called FICO Score 2. That is a type of credit of credit score that they use. So essentially how I back this information up. So I have a credit report here to show you. All right, bam. So if we zoom in, this is a credit report I was able to find. So if you look right here, it says credit Experian Fair Isaac version 2. You look at the Experian FICO Score 2. Those are one of the same. So when you have those discrepancies of the credit score, is because of who they were pulling for. So again, you want to ask them, like, okay, if you're applying for an auto loan, okay, are you pulling my FICO Auto Score 8 or Auto Score 2? So it's just about knowing. So that's the thing about that. And yeah, I was like, trust me, I am the living proof of underwriting. Like, I have access to this information that can go ahead and help you and move forward. So yeah, so like when it comes to her when it comes to like the high score, it may not always be the case in this. So let's go ahead. All right, so this next video we're going to be watching is to find out who has the most debt. I'm going to be guessing to see if my guessing skills are good. Let's go ahead and jump into it.
Like lavish.
It's not. Right. Listen. All I said was that I have expensive taste. That doesn't mean I live a lap of luxury.
If you had to rank yourself against others based on a specific trait, what would it say about how you see them and how they see you? To find out, we brought together 5 strangers and had them rank themselves based on their perceived debt. Then, we rearranged them based on their actual debt. This is ranking.
My name is Dominic, and I'm 29 years old, and I'm a content creator.
My name is Eric, and I'm in nursing school.
I'm Della. I'm gonna graduate school in 2 weeks.
Oh, wow.
Congrats.
Hi everyone, my name is Otavia. I'm a digital creator / social media manager / whatever I feel like doing, honestly.
I'm Lola, and I work in mental health care.
Okay.
Good.
Okay.
What type of debt is there that we're talking about? Like, I assume credit card, student
card,
loans,
yeah.
housing, car.
Yeah.
I mean, I guess personal
Personal
loan.
loans.
Yeah, I can start. So pretty much I found myself in debt. I'm in nursing school. I kind of just had to get student loans.
What about you guys?
Car, some student debt, and then credit cards.
I just got my first car. Personal loan and credit cards and stuff like that. I was really worried that I was gonna have the most debt because I have a lot of embarrassment about my debt.
I have more student loans and like medical debt. I have like a decent amount.
Definitely like house. Yeah, mostly house and student loans.
Okay, okay.
Okay, so this information is very telling. I think personally, this girl right over here, she has the most debt. So student loans do end up being really high. Like people end up taking extremely crazy amounts. I imagine you know, but in case if you don't know, yes. And then medical expenses, those can pile up. So far, I'm believing she has the highest. Let me see. And then let me see. He said he has student loans. So I think he's gonna be second. She's gonna be third, fourth, and he's gonna be last. Let's go. I'm gonna change my perspective based off more information I get. But so far, that's what I'm thinking. That's the intro right there.
So I'm like the only one that has no student loan debt.
And it's throwing me off. This car is gonna be like a Rolls Royce.
No, it's not. I just have like it's a Prius.
Hybrid?
Yeah, it's a hybrid.
Oh, those are expensive.
I don't have that much personal debt. I was born with a cleft lip, cleft palate. So I've had like 7 surgeries. The 2 more recent ones were like a double jaw surgery and a rhinoplasty. And the insurance didn't cover it that time, so.
Jeez.
So it came out of, oh my God.
Yeah. And it still isn't that great because I still can't breathe that well.
Okay.
So I actually need to have another surgery for my nose.
Damn.
Yeah. It's kind of like, it sucks that we have so much medical debt, especially since I can't really help the way I was born. It was hard talking about it a little bit, but it kind of felt like therapeutic in a way. Yeah.
Do you guys have any kind of expense that was kind of excessive for you?
I'm not really much of a splurger. I'll always give like a percentage.
All right, so let's go ahead and go into that. So she's talking about how medical debt is considered personal loan debt. So let's get that out of the way. Like, yes, I was like, this is a loan that you need to take that goes on your personal credit report. So that's something for people to know. If you have medical loans or medical like debts that you owe, that is considered personal credit. So just kind of an FYI.
To my dad.
Good for you. I just have like really expensive taste. The things that I like are just higher end. It's really annoying. I definitely have gotten so much better. Like I'm no longer accumulating more debt.
Have you been paying it off?
I haven't. I'm like working on it.
Most of my debt is not from, everything is a necessity. I never had any unwanted purchases.
Okay, but wants and necessities are different.
Do you have a car that's paid off?
I have a car that's paid off.
Okay. Okay.
Do you own a house?
No, I don't own a house.
How many homes do you own?
Personally, I own 1.
Okay.
I own land, but I own 1 home, yeah.
Okay.
If you were already in a lot of debt, why did you buy a house?
Like I was gonna put that money in rent.
Okay, so it was an investment. Like you're not living in that house that you own?
I bought that house cash.
Damn.
Right. Oh, so you don't, wait, what?
I specifically bought the house in cash, pulled out loans so I can invest in other property so that way I can like actually make more money. I mean, how is like the loans and all that kind of affected all of you, like mentally?
For me, it's an everyday thing. Like I'm already stressed out. I'm just like, man, nursing school is hard. Like I took out all this loan and if I fail, I'm gonna owe this money for nothing. And I just, that scares the living hell out of me. I can feel my mental stability like going down. Like I am being more harsh on myself. So I'm just like stressed the fuck out all the time, 24/7.
Like I found myself in a lot of debt because I was not taking care of my mental health. So like I was really relying on like retail therapy. It made my mental health even worse.
You know, you hear debt, you think, oh, they have like a terrible spending habit or something. I was just like buying food for myself and trying to pay for my rent and stuff. It was just like trying to live a normal life. I'm just like, damn, I want to move on, but I still have debt, so what can I do? And
it's hard to get out of relying on
it is. I'm also someone who has anxiety with a lot of jobs, so like, people are always like, you have to work and work your butt off, and then you can spend that money, but that's not realistic for everyone.
My debt is, so for school, I have like bad anxiety. I couldn't at that time drive far from my house. I still can't really go in elevators. So I had to pick the closest college to me, which happened to be an expensive college. I think like my anxiety was just so bad that like I look at debt or anything money related as just like such a non-issue. I mean, I definitely though have like a thing where like my girlfriend's always upset. She's like, oh, you're always working. Because of my anxiety, I can't really work a normal job.
I get that. Me too, actually. Like I work as much overtime as I can. I just keep like having like anxiety, like thinking I can't pay it off. I don't know what to do at half the time. My family, we don't really come from money, and so even now they kind of have like that mentality where they get scared about not being able to pay something, and sometimes you do need to go into debt, and it sucks, but sometimes that's just how it is.
I feel like you're in a lot of debt just because medical expenses are really expensive.
Actually, I'm mainly student.
Okay.
Yeah.
That's throwing me off.
But then also like house stuff is really expensive as well. So I feel like you too.
Yeah, I definitely think, okay, I'll move.
I went to community college. Like it's not that bad.
I feel like you guys should
I think you
switch.
should be in the third.
Yeah, I think so.
Nursing school is pretty expensive.
And
why are you in the front?
I don't know.
But your debt is like lavish.
It's not. Listen. All I said was that I have expensive things. That doesn't mean I live in a lap of luxury. Where do you go shop for groceries?
Stater Bros.
That's expensive.
Stater Bros?
Yeah.
Okay.
Trader Joe's.
Trader Joe's.
Trader Joe's is more
not
expensive
bad.
than Stater Bros.
No. I didn't say Whole Foods, guys.
Bonds or Ralph's?
Bronzer Rouse. I shop at Walmart for my clothes.
I feel like you should be at the end.
I think you should be
And
at the end.
then
I agree.
you seem like pretty well off, to be honest. Like, well, not too not too
It's a compliment. It's a
I'm
compliment.
okay with that,
given
guys.
right
Do we agree that he would be the most then? Because he did go to nursing school.
And keep in mind, this is just the second year.
So you're gonna be in the most. Like eventually.
Catch me in 4 years, then I'll be here. I'm just kidding.
I thought yours would be more, but when you said that, yeah, your medical isn't as expensive as your school, because school on the top end, it's a lot, but it's like, I don't think it'd be that much if medical's lower.
Right.
Yeah.
Do you feel like you should be where you are?
I think you should be
how
higher
do
than
you
I
personally
am.
feel?
Okay.
I think actually this is good.
Yeah.
Okay.
Yeah.
Okay.
We're locking it in.
Locking
Yeah.
in the answer,
Okay.
guys. Okay.
Okay, so let me see. So if she doesn't going based off her words, she can't be lying. Okay, so if that is the case, then I'm going to put the guy at the top, and then this girl, and then this girl, and then this girl, and then him. Let's see if I'm right. Here we go, guys.
Hey good humans, Milky here. I don't know about you, but I'm always me, the nutrient rich it. The butter weight in garden easier than first today.
In fifth, we have Tavia with $23,065 in debt.
Ooh, we got that right. I was expecting the person at the bottom to be like 2K.
We're here for a reason, guys.
They asked for that.
In fourth, we have Lola.
Okay.
Wait, hold on.
With $24,622
Oh, we're
in
pretty
debt.
close.
In third, we have Della with $37,000.
Oh, wow.
Correct? Hold on.
In second, we have Eric with $42,000 in debt.
Damn.
Yeah.
In first, we have Dominic with $2 million in debt.
Oh.
I just got chills a lot.
He did. Damn it! They didn't give more information. He said that he has land. He took out loans to buy a land. Man, that's crazy. Let me see. I gotta run that back.
$2 million in debt.
So I said he was in first, she was in second, and then she was in third, and then he was in fourth, and she was in last. Damn it. Oh, so they ranked themselves pretty much. Well, they didn't rank it. Just she had the least. Wow. That is crazy. See, these two aren't too bad. She's definitely getting up there. He's definitely fucking up there. Oh, fudging up there. Sorry. Woo, hello. And then 2 mil, it's mostly on property. So, like, he probably doesn't really have 2 mil in debt. So, they're just looking at it from a debt perspective, not assets. I imagine if you would include the assets, it would be, he would probably have at least a little, he'll be in the positive. Maybe, I'm just going to say maybe 100 grand. Based off the property he has. Wow, that's crazy. Let's finish up this video.
I just got chills along my entire.
Bro, I thought like
you okay?
2 mil.
Whoa.
The only thing.
So, there you go. There you have it. This is the video. Don't get into debt. That will definitely throw you off. And wow, I'll probably end up maybe being in $2 million worth of debt, like off properties. But you know, I'm definitely gotta make sure that I have a good balance. So. Oh wow!
But my student loans are more than all of yours. Like my student loans is almost $400,000. I went to Chapman.
Wait, how did we get?
He was sliding by.
Yeah.
I think I'm no longer stressed after hearing $2 million. Like, I'm good.
You know what? I'm good.
I know they felt better about their debt after hearing mine, but there's definitely different types of debt. I pulled a loan out on my house. That's the kind of good debt that I'm not worried about. Medical debt you can run away from a lot easier. Definitely have student loan debt. You know, you can kind of consider as like a bad type of debt because it's something that's not going to make you any money by itself. Credit card debt, I would say, is like one of the worst debt to have. The interest is just so high that it can really catch up and destroy you.
No, I still am stressed out about my debt. Like anytime I talk about it, I just get like really nervous and anxious and like, I mean, because it's taboo to be poor. Talking about how much you earn, like that's taboo as well. Automatically people assign worth and value to that person when it's not the same.
For a while, I was very against debt and I would miss everything my friends did because they grew up with money. Their parents brought them cars in high school. I would have to stay home because I couldn't afford it. And that's when my mindset changed. I'm like, I'm in my 20s, I have to do stuff.
Yeah.
So I'm like, okay, let me start swiping and live a little bit of my life.
Yeah.
Definitely a lot of people see, oh, you have debt, you're irresponsible.
Right.
And I'm just like, dude, everyone in med school, everyone in pharmacy,
Right.
So
like
many
everyone
people.
that's like in the healthcare is owing
For sure.
money.
I think everyone, there's a lot
Everyone.
of debt. I don't think debt really surprises me anymore. Like knowing that a lot of millionaires and millionaires use debt to their advantage, and yet still lower class people are made to feel like it's a bad thing. I've been using it just to live a normal life, and that would be my advantage. It's no different. So I don't
know. It's like how that guy said about how debt is debt at the end of the day. Like, yes, if you look at it from a different perspective, yes, like pulling out a loan from your mortgage to invest it to make into something that's going to make you money, yes, that can be a good way to get into debt. But just living life, yes, that's getting into debt. That's kind of like almost taking like a cash advance on your taking a cash advance on your debts to not your debts, taking a cash advance on your paychecks just to live life. Like, you're not really then that can also be a different perspective. If you're trying to live, you know, a life of enjoyment, like traveling and stuff, I could definitely see it in a hindsight. But between like traveling and investing to make me money, I'd rather just invest, because I was like, you know, let's go ahead and travel in the future, especially if, you know, let's say if you're going to make like $5,000 today based off maybe the money that you invested, like you use that money to actually travel. So so I think it's definitely like perspectives and stuff. But let's continue this video.
I don't think I need to feel bad about it anymore.
I was so integrated into learning everything about money, which is why I am where I am today. It's not hard work or anything. It really is just the privilege of learning.
Be smart. Like, know if you can pay it off. But if you have a vision and if you have a plan to succeed, taking that is okay.
Get credit cards. No, I'm kidding. Do not do that.
Don't get a credit card. Like, just don't.
Go swipe.
All right, well, there we have it. You guys were able to learn here some information. If you definitely did, hit the like button. And if you're new to my page, go ahead and subscribe and then watch the next video. Like watch the next video, because again, I have a lot of credit stuff for you guys to learn, and I'll definitely see you guys on the next one.